forgive me if logistically this gets weird because I'm going to be a clicker as well. But I'm so needy. And this will be very relaxed since we are a small group. So if you have questions about me, it doesn't mess me up because I speak 2 languages. English is my first language and health insurance is my second language. Really, this is what I do. And one of my passions is like, or maybe pet peeve, it's both. I want people to understand benefits because they're expensive. And when people don't get it, it's like, what are you paying for them if your employees don't understand what they have? So anyways, I want people to understand it. So I speak health insurance and I translate it into common language for people. So we're talking about benefits. So what do medical insurance, pet insurance, and a fully stocked break room have in common? They're all benefits. These are all different types of benefits that companies offer. And in a tight job market and in the job market we have today, benefits are really a part of that, a crucial part of your benefit package overall. I also want to tell you I'm kind of a nerd. I like dumb jokes, so there's going to be some dumb jokes in here. Okay, so Ahola Benefits. My last name is Ahola. It sounds Hawaiian. I'm not Hawaiian. It's Finnish. I also was a marketing major, so I wanted to have my tagline be a whole lot of insurance, and my husband said no. I think it works. He's flooring, and he's a whole lot of floors is what I was like, yeah, this would work. But started just as myself. I've been a broker for like 15 years. I worked at a big, shiny, fancy brokerage in Bellevue. And then we moved over to Cle Elum 8 years ago. I commuted for 4 of those. And it wasn't the weather, it wasn't the scary I-90 that prompted this. It was my kids growing up, and there would just be things where I'm like, I need to be closer to them in proximity. I can't have this hour drive to get to them. So I'm like, I'm going to open up this business. And I'm a planner. My husband is like, just do it kind of person. I'm a planner, so I had to have all my ducks in a row. I brought along my stepdaughter, Ashley. I said, hey, do you want to do this with me? Because she had interned at my brokerage in Bellevue when she was younger. So she knew the words a little bit. And she was like, so I brought her on part-time. She had my grandson first, then she had my granddaughter. So she would go part-time, full-time, but she's back to full-time. And then we brought on Emma Johnson a year ago, and they both are the support team. And then we also have some in-house people, like I outsource people to do my books, all those things. I like to surround myself with experts so that I can do this. Emma's out at a meeting right now. Ashley's answering the phones, right? So I can build business and help businesses. But day in and day out, that's what we do. We're helping employers kind of design benefit packages, secure them from the best places, and then implement them. And then we don't go away. So Emma's at a meeting today for a client we've had for 10 years. She's doing an open enrollment meeting. She's translating the benefits to their employees. We helped them through the renewal process. They said, this is what we want. We secured it. We put together a benefit packet electronically. We do videos, and then we help the employees understand it. And then again, we don't go away. The employee has a question about a bill or about, I don't understand how this works. You said this is how it's going to work, but I don't get it. They call us instead of necessarily the owner, and sometimes even the HR manager. I want them to pass them along to us. So that's Ahola Benefit. So we've been open since 2018, been in the health insurance since 2007. And then before that, I was at Costco for 10 years. So that's where I learned my customer service, is at Costco and Nordstrom. So just a little bit about me. Go ahead. So what are employee benefits? Let's define the term. So employee benefits are any kind of tangible, I can put my hands on it, or intangible, non-salary, non-wage benefit that you give to your employees. So the definition points to all benefits, but we're going to talk about insurance today. Which one of these is made up? So I did some research on employers and their benefits, from off the wall to logical to crazy. So one of these is not real. So free flights for employees and their families anywhere the rest of their lives, is that a real benefit? 2, death benefits. The surviving spouse gets half of the salary for the next 10 years. Is that a real or made up? And then the third one is Friday helicopter rides to the mayor's speech. Do you guys have an idea? 1, 2, or 3? Which one is not real? 2 of these are real and 1 is not. Any ideas?
I would guess number 2 is not real only because it doesn't.
Sounds crazy.
Yeah, well, no, it doesn't sound crazy. It's just because the other 2 are so crazy that.
Oh.
The least crazy.
The process of elimination. Any ideas?
I think 3 is made up.
Which one do you think?
I was thinking 2, but I do think it's 3.
Okay. Go to the next slide. It is 3. So Google does this.
Oh,
Death benefits, or at least when I did my research, they were doing this. And then Continental Airlines, which is no longer in existence, did this. Maybe that's why
Maybe
they're
that's
out of
why.
business. Yeah, that's why. And then Friday helicopter rides, that just sounded awesome. I know, yeah, bucket list kind of thing. I want to have a helicopter someday. Okay, next one. Okay, so again, we are talking about the most important benefits, if you ask me, is medical, dental, vision, life insurance. Okay, go on. So why do employers even offer benefits? Is to retain and attract those employees consider benefits as important for their overall job satisfaction. And then 63% of job seekers pay attention to the benefits company offers. So sorry.
no worries.
Company offers. So even when you're posting a job ad, just saying benefits, you're going to get higher hits on your job ad. Just saying that. They may not know what benefits are yet, but just the fact that you're saying that is a key that employees looking for jobs key into. But then obviously we work on designing the plan. And then 33% of employees cite benefits as a reason they look for another job, because maybe lack thereof benefits, but they say, hey, I'm gonna go look somewhere else. And I'm sure you all have heard someone say, I can't leave this job because I need my benefits.
Mm-hmm.
Or we've been in a job that we could do.
Yeah. Okay, next slide.
You can just take a click.
Oh, click it. There we go. Okay, cool.
Help you out. On the clicker.
Okay, so of all the benefits that are out there, of the benefits that we're talking about, these are some of those fringe benefits, right? Number 1 is health insurance. And this is ranked by employees, and this is a Glassdoor economic research study. Number 2, vacation and PTO. Number 3 and 4, pension, 401k, retirement. Those are all important to employees. And then 6 would be dental insurance, 7, maternity and paternity leave, 8, sick days. Obviously in Washington State, we have mandatory mandated sick days. For every 40 hours they work, they get 1 hour of sick time. So a company can offer above and beyond that to set themselves apart also on this. Click.
That was, you had for 2018 last word.
Oh, that was 2000. Oh, we go back.
Is it
16 Glassdoor economic research study. Yeah, no problem. And then this will be available to you as well, so you have all my course.
Oh,
Our communications person, Katie, thank you very much.
Yes.
She's
Okay.
going to create it to where it'll be the slides and the audio.
I decided the same as today.
Mhm.
I think so.
Yep.
Sometimes people do it different.
Oh,
People don't do that.
sneaky.
Yeah.
I don't like that.
I look, you get number 5.
Sorry, you get my games too. You're gonna get my games. Okay, so if I have another one, which one is made up? 1. Okay, so of these 3, 2 are real and 1 is made up. So 2 are real benefits somewhere out there.
2 truths and a lie.
Yeah, there you go. It's like the whole thing. Aquatic office accommodation, 2 egg freezing,
Egg freezing, like
these
Like-
girls,
female.
female eggs. Oh yeah, I guess that's a good question. What do you mean, chicken eggs? What are you talking about here? And then for the purposes of having children later, and then crypto preservation of your body, of you. Which
You go to
one?
Mars, maybe.
Yeah, so you go to Mars.
2 truths and a lie.
I
say 1 and 1.
Okay.
I
1.
think 3 is a little
Or-
extra.
It's a
I think it's a little voluntary. One probably would offer that.
I know, right?
Okay, benefit, I think that like they can opt in for their FHA or.
Ready?
Go for it, click. So I don't even understand what that would be, an aquatic office.
I can see you're like marine biologist and you need your office
No,
underwater.
that's exactly what I was thinking.
I was thinking of like a
What is
swimming pool
water
or a-
coloration?
Is that safe?
Yeah, is that safe? So Spotify, Apple, and Facebook were doing egg freezing as of the
Yeah.
time I did this study. So they would do that for employees,
Yeah,
like they
I've
pay
heard
for
of
that.
that
And I think
before.
it's like 15,000, maybe $20,000 for the process. And I read there's controversy because it's like promoting them not having kids now. Like, we don't want you to have kids now while you're working. Do it later. So we'll pay for it. And then crypto preservation, good Lord, this company called Numerai, a cryptocurrency hedge fund.
Yeah.
So they actually advertised it as part of like their new hiring thing. Like, we will not only take care of you here and now, but later. So they would pay to have your body, and there's a company that does it. I think it's all pretty.
And you'll have an NFT on the container at.
What's the NFT, huh?
Oh, it's another, I was making a funny joke.
Oh.
Funny. About cryptocurrency and NFTs.
Oh, got it.
We won't lose you.
Yes, we might lose you, just like your crypto. Okay, so what is group? So I've started this office thing down there. You guys can see, like, when I do my employee benefit meetings, I have all kinds of, I mean, not so much that it's unprofessional, but you're gonna lose people when you're talking about health insurance. Their eyes glaze over. They're like, only the people that want it, like, are upset will talk. The ones that are like, you're changing my pharmacy benefits will talk, you know. So I try to engage and make some light of some things. I like puns too, a lot. So group health insurance is insurance coverage provided to a group of members, usually made up of company employees or members of an organization. It's offered at a reduced premium because over individual insurance, because the risk is spread out amongst more. In Washington State, we have these things also called association plans. I don't think they exist in a lot of other states, but in Washington, we also have this thing called unions. So unions and association plans bring our rates down. So I'm going to show you some average rates. Those are national rates, but the fact that we have unions and associations, Washington's average rate is actually a little bit lower than some of the other ones. Yeah.
Are some of the unions and associations limited by county? Because there's some insurance companies that will do certain types of groups in certain types of counties
Yes.
unless they're above a certain threshold.
Yes, but the associations that I work a lot with are industry specific.
Okay.
And so they don't really care.
Okay,
I shouldn't say
got it.
they don't care where you're at, as
Sure,
long
sure,
as you're
sure.
in Washington.
Right, got it.
So if you're in construction, you're in building, you're in manufacturing,
I
you're in
see.
marine, then I've got the association for you.
I
There
see.
are restaurant associations as well.
So
There's,
it's more industry.
yeah, and then what they're doing, I liken it to Costco, is they pool all their members
Right. Yeah.
together to go negotiate pricing from the carriers. So that's where small employers can win, and that's where I want to help them win, because it is frustrating when you send a sole prop to the individual market and you just say, best of luck, like, bye, because it is what it is. You don't have options. You have like one carrier, two carriers. So when you have a group, you have a lot more flexibility and options.
What's more premium?
What's that?
It's more premium.
It is.
Click.
Because I do. Okay, so most offered types of plans. So this is a little bit about networks. So PPO is the most popular. This is what employees, if you ask them what they want everything, right? But this one gives you the most freedom of who to see without having to get a referral. The medical plan does not require you to get a referral, 85%. It's also the more expensive kind. It's the most popular. Next would be high deductible health plan, and this is my favorite. This is what I have for my company. I have an HDHP and a traditional plan for those employees that don't like this. So this gives you the ability to have a health savings account with it. And I've worked for large, no.
Okay.
I mean, this is a PPO. You still could have it be a PPO, but HDHP is specific.
Right.
So you have to have these terms, the
Right,
high
right,
deductible
right.
health plan.
Right.
IRS gives it a seal of approval, good housekeeping seal of approval that says this type of plan, you can go open up a health savings account at Cashmere, or Health Equity is who my company is.
You're self-insuring, basically.
And then
Yeah.
my company, some employers, so I worked for, like I said, a big fancy shiny brokerage in Bellevue. They put money into our health savings
Yeah,
account
sure.
every month. and then I could put more in. Now, not every company can afford that. We just worked with a company here in Cle Elum that put one of these in place. The owners were like all over it. They were like, we love HSA plans. And the employees were like, we're just happy to have medical insurance.
Yeah.
So some of the employees are like, well, I'm gonna wait. And I'm like, well, do you get prescriptions? Do you have glasses? Do you go to the dentist and never have any out-of-pocket expenses? So what is that on an annual basis? $500? Okay, take that $500 and put it into your health savings account pre-tax.
Yep.
No FICA, no social, whoever FICA is,
Yeah.
Social Security, Medicare. So for the employee, if they're already gonna spend that money, it makes sense to put it in this and it lowers their taxable income, or they end up getting more money back at the end of the year. Because I've had people say, well, why would I don't need my taxes lowered. I already get a chunk of change back every year. Well, you would get more money back from whatever you're putting in. Okay, HMO, that is where you have to go see one doctor to see a specialist, right? So I grew up in February, I was on group health. I think I was born on
Yeah.
group health, and my mom called it group death. I'm not allowed to say
Yeah.
that because I'm a broker, but she called it that. I was fine. I have my arms and my legs, I was fine. But they then got purchased by Kaiser, right, in 2017. Kaiser no longer is available in Kittitas County. They are not friends with KVH right now. So KVH and Kaiser are not friends right now. So I just had my last company this year. So they were not giving renewals in 2022. So if you have a West Side business, you can have Kaiser. If you're in Yakima, you can have Kaiser. Spokane, you can have Kaiser. Kittitas County is no fly zone for Kaiser.
Sorry, I'm asking so many
It's
questions.
no, it's good. It's not, but I shouldn't say it's 100% no. Like I said, it
Sure,
just
sure.
depends on the company.
Yeah.
Okay, telehealth is a big one. In Washington State, it's mandated. We all have telehealth in all of our medical plans. The state plans have it, whether people know they have it or not. And obviously with the pandemic, that's what is the catalyst that all Washington plans will have telehealth or telemedicine. And it's normally a lower cost option to the employees. Okay, click. So how much does it cost of the total compensation? And then we'll get into a couple of the house and strategies, kind of what you were talking about, Sean, like the 50% and some other ideas. So according to a 2021 Bureau of Labor Statistics with the U.S. Department of Labor, health insurance accounts for 7.7% of the total compensation. So if we have a pie here, 70% is the dollars that they make, 7.4% is paid leave, other benefits, whatever that could be. If you're offering some retirement, you're offering maybe additional vacation or whatever you're offering. And then the FICA as the taxes, 7.65% on every dollar your employees make, you are paying 7.65%. Health insurance, again, is 7.7% of that total pie. And this is all employers through the U.S. Bureau of Labor Statistics. And about 50%, I think there was a slide that said about 50% of employers, those in the United States get their health insurance through employers. Click. Okay.
The most reliable payer for premiums.
Yeah, right. Employer. I've had a lot of conversations with colleagues over why is it the employer's job to offer it? But
It's
then you
just a
get down,
reliable.
but then you get down to like single payer, which
Yeah.
also is scary. Okay, so group plan requirements. In order to have a group plan, in order to get a group quote, you have to have at least 2 full-time employees. And we're talking Washington, so I'm saying Washington employers. And that means 1 W-2 employee other than you. So sole props. There are some options. It's just really challenging, and you can't, it's almost, and you probably found this, a group plan for a sole proprietor versus an individual plan. It's like, who knows if it's going to be cheaper or not.
No one would call it.
Yeah.
No, yeah. You won't even talk to you.
They said at least one.
One belly button that's W-2 other than the owner. Yeah.
And it's full-time, it's one
Full-time.
FTE.
Yeah. So then what we run into a lot is we'll get a company that has 10 employees and they're like, we just want it for me and my wife.
Sorry.
Doesn't work that way. Or me and my kids or whatever. Sorry. I mean, I get it, but because they're trying to get the discounted rates. But you once you offer health insurance, then the carrier has some requirements. The minimum employer contribution for the majority of carriers is 50%. There are some programs, depending on the size, like Premier will say, okay, if you have less than 5 employees, then they are going to make some higher requirements, like you have to pay 100%, like we were talking about. And then, or you do 75% of everybody, employee plus dependents. And so I have some small employers that they're like, okay, that's what we're going to do. We have 3 employees, we're going to pay 75%, and we're just going to pray that nobody has their dependents. But it's still a lot, still a lot. And then minimum participation is 70 to 75% of your full-time eligible employees. So if they're full-time and the carriers will let you pick the definition of full-time between 20 hours and 30 hours typically, because the Affordable Care Act said you can't go higher than 30 hours, even though the applications will let you put 32, but the Affordable Care Act, which is the law that Obama signed into law back in 2010, 30 hours is the ceiling, 20 hours is the insurance company's floor. So
What does that mean, the ceiling?
so that's the most that you can say that an employee would be, have to work in order to be benefit eligible.
I see.
Yeah, 30 hours a week. So and my company full-time is 40 hours a week.
Yeah.
However, for benefits, it's 30 hours a week. So the employee handbook has a little
But
caveat.
then we can have like a range of, they may have to pay a different contribution for down to 20 hours. Is that true?
Nope, no contributions also gotta be the same. So once you,
Like 50 or less.
Correct.
That's what I mean.
yeah,
Like,
so we're talking,
some employers are like, if you work full time, we'll pay for the whole thing. But if you
Yeah.
work 20 hours, you have to pay 25%.
so there was, I have employers, and just so a little bit about the employers that I work with, the majority are small employers.
Sure.
But I do have employers that have 200, 300, 100, so there's all kinds of other fun stuff that they have to do. 500 filings, there's all kinds of ACA compliance. But there are some companies that still do that. Like, we're gonna pay 100% of all management benefits, and we're gonna pay 100% of the employees, the non-management, and 0 of their dependents. But there was like 2 sentences in the Affordable Care Act that said they were gonna penalize employers for doing that. So in 2010, it came out in the law that said, basically, it's non-discrimination testing, same thing you do for 401ks, same thing you do for retirement benefits. That if you're giving a richer benefit to a higher wage earning employee, then they will be subject to some excise taxes.
Yeah.
Taxes, like penalties, and the employer would pay $100 a day penalty. So this was in the Affordable Care Act. So I'm in the broker world, right? I'm like, okay, so I'm ready to tell my employer something, but then they were flooded with questions. What about this situation? What about this situation? So then the federal government came out 6 months later and said, we're gonna pause that part until we give you further guidance. And they did not receive further guidance. So some brokers say, well, it just doesn't pass the sniff test to give richer benefits because you can get in trouble. So what I told my clients then, if you're already doing this, you need to be prepared that the federal government could just say, hey, you gotta stop it and hope that they don't go retro back to then. But that's on you. Like, you need to consult with an attorney. And then new employers, I don't tell them, I tell them to stay away from it.
Yeah. Okay.
Yeah.
Good to know. Good to know.
Again, like,
Yeah.
Yeah.
Okay. So 50% minimum, or
yeah,
it's like 50% or 100.
you could do
It
more.
just has to be across. the
I
board.
have pie charts that show what the majority of employers
Okay.
do. It's between 75 and 100%.
Oh, okay.
But more and more, we're getting like companies are paying 100%, but that's because they're going to higher deductibles
Right.
and HDHP plans.
Okay.
Okay, and then go to the next one. Okay, so here's some strategies for employers. Define contribution. So if you get a health insurance quote and the average rate is $400, you as the employer set your budget as long as it's above 50% or at 50%, $200. And then you as an employer, that is your defined contribution. Or let's say you budgeted $300, regardless of the percentage, you know it's above 50%. But a defined contribution is where you, the employer, said, that's how much money we're going to contribute to the employee's healthcare, regardless of what they choose. Maybe you offer 2 plans, maybe you offer dental vision, and maybe there's a cheaper plan that doesn't cost $300. So then the employee can a la carte pick what benefits they want. That's what a defined contribution is. The other
Can you do
employer,
that without them? I'm so sorry. I'm
go for it. No,
asking.
this is good.
So for a defined contribution, if you offer that to all employees and somebody says, I don't want to have
Yeah,
health
yeah.
insurance, can you still offer that as they can utilize it as like an HSA or whatever?
No, that's a
Oh.
really good question. So cash in lieu of
Right,
benefits.
right.
So a lot of carriers have in their fine print, you cannot offer cash. in lieu of
Why? Is
benefits. Well, I've heard I asked the same question, actually, I had an employer push really hard. I'm like, well, I'm gonna do this. I want to do this. And I'm like, do it then. I'm like, stop you. The carriers say that it can cause an issue where an employee, let's say that employee gets cancer or something, and then they're like, that employer paid me to stay off their health insurance. And it can cause
Oh, I see what you're
liability.
saying, I see what you're saying.
It can cause liability. I don't know, that seems like a.
No,
kind
no,
of
no,
out there
I used to work
situation.
for Safe Insurance, so I can see somebody, because we would have claims all the time where somebody said, no, I put that on, you know, it starts to
Yeah.
become this he said, she said thing,
Yeah.
like, okay.
So just to keep it like,
Yep.
and then they just get a waiver from the
It's
employee.
just super clean and
Yep.
diabetic.
Yep. Base buy-up, I alluded to that a little bit, is where the employer offers two plans. A base offering would be their lowest cost offering, and maybe that's where they pay 50%. And then you've got some employees that say, well, I'd like a lower deductible and I don't mind paying a little bit more. So then you have a buy-up offering, and the employee pays the difference between your 50% and whatever the cost of the buy-up is. Also, there might be a base buy-up option where an employer pays 100% of the base, and then it's less, of course, for the employee to go to the buy-up, but it's still on them to pay the differential. So that's another option. I personally, like my company, I offer two plans that are very similar in cost, but very different in benefit design. One is the HSA and one is a traditional. We talked a little bit about HMOs and why those are a strategy, because they are less costly and premium. And so because we don't offer, Kaiser is not available in our area, and that would be the true HMO. United Healthcare, Regions has a few of them where they're skinnier networks, limited networks. But those are options to get a lower cost. And then health savings account options. Those plans are historically a lower price point than traditional plans because everything is subject to the deductible.
Right.
Everything I do, except for preventive care. So I just took my kids in to get their annual physicals poked, prodded, weighed and measured, and I don't pay a dime for that. But if in that visit,
Yeah.
Junior says something like,
Look at
oh,
the-
headaches, or I'm anxious, I'm really anxious and not sleeping well, then that changes that whole visit. Then you see the doctor writing notes, that changes that visit from preventive care, and now that just became something else, which is, I mean, it's not like, I know that it's gonna change. I know now I'm gonna get a bill for that. If it's strictly preventive and they get a good bill, clean bill of health, I pay $0 for those annual physicals. And that includes preventive care, is your immunizations that are gender and age. Federal government has a list of what are the immunizations based on your gender and age. What I mean by that is like shingles is free if you're 60 or over. If you're under 60, it's not free. What's another one that's gender? Colonoscopies, mammograms, those are also like, well, sorry, mammograms are gender, colonoscopies are age.
Like that cervical.
Same.
Yeah.
Patent smears and things like that, 100% free, as long as I get a clean bill of health. If they find something in the mammogram, thank God they did early, right? Early, that's why we have preventive care. But I know a lot of times it gets twisted in our mind and it feels like bait and switch, because you go in there for one thing and then they're like, sending me. The other one, so health savings account is, I have like a totally sole presentation on just health savings accounts and kind of how strategies are on them.
Yeah.
I love them. There's so many tax advantages to the bank account. There's 3 tax advantages. The money goes into the bank account pre-tax if you run it through payroll. It's the best way to do it, run it through payroll, because you get the FICA savings. You can,
You mean the employer gets it too?
yeah, so
Got
the
it,
employee
got it.
and the
Yeah,
employer both
double.
get the FICA
Tax
savings.
rebates. Nice.
And then, so it's
I
a
didn't
double,
know
it
that.
pays for itself in my opinion. So that's one. And then the money grows and it earns interest. You never lose the money. Every year, the banks give us, it's getting better on interest rates, but for a long time it was nothing. And then I can spend the money with no tax implications ever, as long as I use it for medical, dental, vision, qualified expenses. So a Diet Coke doesn't count, a lobster doesn't count, but
But some summer
orthotics
camps
do.
Some summer camps do for kids too.
Yeah, if it's like medically
If it's on the-
necessary.
Yeah, whatever's on the list.
Pool, I saw pool on the list, but only if it was like a specific like medical condition where your doctor prescribes it. But anyway, a lot of stuff at Safeway, I think Band-Aids are on the list. Menstruation products are on the list. That's new with COVID. They expanded it to NyQuil over-the-counter medications during COVID. So now I can use my HSA to buy like cold medicine. It used to be prescribed, so I like to use Band-Aids as an example because they're so expensive and we go through them. Okay, health reimbursement arrangement. I have quite a few like larger employers offer them, but I feel like there's opportunity for smaller employers to offer them too. So HRA, health reimbursement arrangement, is different than an HSA. HRA is the money is always the employer's. The money, if the employer picks a medical plan, maybe a $5,000 deductible, high deductible, right? Non-HSA plan, $5,000 deductible. Maybe it has a $40 office visit copay. And the company said, let's compare that to a $2,500 deductible plan. Well, the money, I can't afford the $2,500 deductible plan, but I can afford the $5,000 deductible plan. But I want to give my employees a $2,500 deductible plan. So an HRA is when a company puts in place a fund that stays with the employer, and the employer says, employer, will fund your deductible only as needed. So you, employee, pay the first $2,500 your deductible. And the employer, will come in and pay the next $2,500 only if you satisfy it. The money is never the employee's, it's always the employer's until the employer pays the doctor. So I'll give you an example. I've gotten a company that actually does that, $5,000, and another company that is $1,000 HRA is what we call it. So when their employees go to the doctor and they buy their prescriptions, they use a copay, and the HRA never kicks in. But when the employee goes to the hospital and they pay the claim goes from $2,500 to $2,501. As soon as it hits $2,500, that's when this HRA kicks in. And then the HRA, which is managed not by the employer, because the employer doesn't want to look at anybody's HIPAA private bills or private claims. It's managed by a third-party administrator. They see the claims and they say, okay, HRA is kicking in for Nicole, so we're going to pay her doctor the next $300 because the bill was $2,800. Thank you.
And it just comes out of that fund.
It comes right out of the employer's account, and then the third party has access to it. And it's all like, there's a contract between the two. There's language that says, we'll only tap your account as needed. And then they send it directly to the doctor. So it never even touches the employee's hands. It's all behind the scenes. The employee has a summary of benefits and coverage saying they have this HRA, so they know they have it, but it's not ever the employee's money. It's not taxable to the employee. It's an expense to the employer. HRA, it's really just an employer saying, hey, I'm on a limb with you, but the employer knows their liability. It's $2,500 times each employer. So they pay the lower premium every month. They get, that's a guarantee. What's not a guarantee is all your employees hitting their deductible. So it's a way to offer.
And you can't offer both. You can't offer HSA and an HRA.
You can. It's called a limited purpose.
Okay, that's clear.
Yeah, that's it. That's it.
So is that 2,500, that's an annual cap?
Nice.
So I've got one employer who only offers it to the employee.
Right.
So, but then I've got another employer that says it's 2,500 times 2, so employee plus dependents. So it's up to the
Wouldn't there
employer.
be a family cap on that?
That is the thing.
Catastrophe and-
Most benefit plans, the deductible is times 2. That's the cap. And the out-of-pocket maximum is times 2. So it doesn't matter if I have 6 people in the family. If 2 people in my family hit the deductible, the third, fourth, fifth are at a 0 deductible. Most plans. There are some plans that it's the deductibles times 3. Out-of-pocket maximums are regulated by the federal government. It can't be higher than a certain amount for a family.
And you said those are the high deductible plans that offer these type of augmentations to the policies.
HRA is something you can pair
Oh, with anything.
with anything.
Okay,
And I
okay.
actually, like, I don't want to confuse you guys, but I actually have a company that offers an HRA with an HSA qualified plan. They just can't open up the banking. So they pay for this plan. It has a $1,500 deductible, and the company goes, we'll just give everyone a $1,500 HRA. And you don't have to pay anything. So the employer pays 0 upfront. The employer pays the first $1,500 if needed. No, but not everybody uses it. And like, I see their utilization, they're at like 9% of their max so far this year, and we're in September, so it's actually like pretty fairly low utilization this year.
On high loyalty for them, those employees, man, because they have the deductible coverage.
Yeah,
Like,
no.
that's really a.
And it's a
it feels-
manufacturing firm.
Yeah, but it feels like employees, I would assume that they feel really taken care of
Yeah.
with that type of plan.
They have like a
feel
zero deductible.
cared about. you
Yeah.
know?
But
Yeah.
everything is subject to the deductible, their
Sure.
prescriptions,
Yeah.
their office visits. So all of those employees have a little card that says HRA, and they just swipe it when they're at the pharmacy, they swipe it when they're at the doctor. And then the third party administrator in all the debit credit world substantiates the claim, says, yeah, this is a deductible expense, money comes out of the company's designated bank account. So this is a fairly popular way to like provide a gap.
Yeah.
So you're paying for a slightly not rich plan, right? A higher deductible, and you're getting a slightly rich plan. Okay, next slide. Click. Okay, so adding a new cost center. So if you're a business that currently doesn't have this cost center, obviously cost centers, and you probably know this term way more than I do, but it's you're spending money on something that doesn't make you money directly, right? Benefits don't make you money directly. And so it's a hard pill to swallow because you're like, yes, how's that making my company? It's not adding to the bottom line, it's taking away. But it indirectly, right, does through retaining and attracting those employees you want and need. Less absenteeism. If an employee has access to healthcare, they're going to use it when they need it instead of letting something fester. You know, the one thing I hear about most is like abscess teeth. That's why dental's so important. People just let them go and you can die from abscess teeth. So adding that new cost center is obviously, can you afford that? But it's like, can you not afford to offer that? And it's like, how much do your employees want this? How much are you setting yourself apart as an employer? Those are challenging questions. Okay, click. So this is 2019. And like you said, Shonda, that was the last time you shopped. And so rates have gone up, but also people got older, right? So we all from 2019, we aged a couple of years. So when you're a small employer, there are a couple ways to look at your rates. The carriers will give you averages, and if you ask for them, they'll give you the age banded rates. So as you age, as we age, our health needs increase. And it's just statistics. It's not mean, it's just what it is. And we can always point out that so-and-so is the healthiest person I've ever met, and that so-and-so is the unhealthiest person I've ever met. We can all point those situations out, but statistically, as we age, our health insurance needs increase. And then there's this time of women when we're like insurance companies' worst nightmares when we have babies. That's when we're their worst. We're actually more expensive than a lot of times. But 409 was the average premium in 2019 for group plans. For individual plans, it was 440. And although rates have gone up, they haven't, in my from my view, I'm still waiting for like COVID to hit them. I feel like they have like, so when in 2013, 14 is really when I'll call it the Affordable Care Act really hit the streets, and the rates were going up like 50%, 70%. Like I was crying as a broker. It was the hardest time because that's when the Affordable Care Act actually hit the streets, like actually hit health insurance companies, and the rates were so high. So that's kind of like, I'm waiting, not a negative person, but I'm like, I don't understand how all this COVID could be free. We didn't spend a dime. At some point, it's going to catch up with us. The moral of the story is group insurance is less than individual. The differential isn't as wide as it used to be. But as an employer, and if you don't know this as an employer, you know this, you have so many more tax write-offs than an individual does. So many more. Like there's a huge long list. And I'm not a tax advisor. I'm just going to say that because I can't get into the details because I'm not a tax advisor. But this is an expense of doing business, and you can split it with your employees, and the amount they pay, you don't pay payroll taxes on. You do not pay every dollar that your employee pays and comes out of their paycheck. You do not pay the 7.65%. So that's that other side. So if you run your health insurance through what's called a premium only plan, or Section 125 of the IRS, then you as an employer can take it out of their paychecks pre-tax and not pay the 7.65% off. So As a broker, I subscribe to an HR service called Mineral, formerly Think HR, and they have complimentary premium only plans. So we set those up for our clients. It's a document that has been SHRM certified, Society of Human Resources Management. Their attorneys have put a seal of approval. So we provide those as complimentary to our employers. They have to adopt it. So they got to read through all 46 pages. And I'm happy to highlight things that are super important to them. But once they adopt it, then they have to abide by it. And then that means when they bring an employee onto the plan, the employee knows, hey, this money's coming out of your paycheck pre-tax. Premium factors, age and zip codes affect your rates. Plan preferences, what deductible copay you want, and also HDHP, PPO, all those things that we talked about. And then how you shop for and buy coverage. So just so you know, as a broker, we all get the exact same rates. I don't get different rates from the guy down the street. We all get the exact same rates. The way we separate ourselves is service and what we have access to. That's how we separate ourselves. But we're all going to get the same rates, assuming we provide the same data, right? So if I provide 6 employees and another broker provides 9 employees for the same company, our rates are going to come out different because it's different ingredients going in. Okay, so next slide. Those all affect your premiums. Last one, which one is made up? What did you say? Two
Truths and a lie.
truths and a lie. 2 truths and a lie. Which one's made up? Spontaneous, all expense paid trips to Vegas. First one. Second one, $11,000 signing bonus wrapped in bacon. Third one is celebrity trainers at the gym.
Made it for what?
Oh, benefits, actual benefits that companies provide. She's like, what are we talking about? I just heard bacon.
Number
So like
two.
11,000
Yeah,
cash
sure.
wrapped in
Yeah.
bacon.
I don't think insurance and bacon go together.
A signing bonus to come work for my company. So 2 of these are real and 1 is made up.
Oh.
I feel like number 2 is Oscar Mayer and it might actually be real.
Yeah. Nice play. I have no idea.
Oh no.
Okay, go for it.
Wow.
I mean, it's
True.
A gaming
So,
company. Oh, yeah, that makes sense.
yeah, right? Okay, go to the next slide. It's super cute.
Oh, that's fun.
This is the company. Not cute. It's so weird.
Yeah.
So here's the bacon wrap cash down
Nice.
here.
Nice, nice.
And so when you go to work for them,
Right.
so gaming companies are so fun to look
Yeah.
at when you're looking at their benefits because
Yeah.
they're just weird.
Well,
They're trying to attract a different level of human being.
But also they're just kind of like, if you get your work done, we don't care.
Or what you do.
Yeah, so whatever you want, like just get your work done
Yeah.
and make us money.
Okay, so I know we're over the time. So what I also wanted to say is next steps is if you want to research, there are so many different ways. Like I said, you go to an agent, again, we're gonna get the same price as if you went direct to the health insurance company without an agent. But the nice thing about working with an agent is we speak health insurance and we might come up with ideas because we work with a lot of employers.
Been around the block.
Yeah, we're always coming up with new strategies. We have to, because health insurance
Oh, yeah.
is so expensive. Also with the pandemic and just how to communicate it to employees. So we've had to make a lot of changes, but they're good changes, like offering videos to the employees because not everyone can get together at one time to sit in a room and talk. So we push out videos that employees can click on their phone and watch it whenever, call, email, text us later and ask questions. And you can't like bind coverage over a voicemail, for sure you cannot. But it's helped a lot of employers with a lot of, obviously, employees being everywhere. But thank you guys for your time.